Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. This is a public roundtable for our free community members. 1Mby1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we do these free mentoring roundtables week after week after week. And this is the 507th session. So we've been doing this for a very long time, and hopefully we'll continue to do this for longer. The event is being recorded. Every single recording is available on the 1M1M Roundtables channel on YouTube. And you can follow us on Twitter at 1M1M and at Stromana. Today's hashtag is 1M1M. This is a roundtable, not a broadcast. So we want you to participate as much as possible. I will open the line up for question and answers and audience participation in a bit. We will start today's session with an entrepreneur pitch. Let me set some expectations about today's pitch, as well as for those who are planning to pitch later on, at some later date. We are on your side. This is a safe working session. We have no other agenda besides helping address the issues that you are facing in putting one foot before the other and removing roadblocks as you pursue your entrepreneurial journey. You may disagree with feedback you get today from me. That's okay. Consider the feedback. I'm speaking from experience, but it is at the end of the day your venture. So how you want to play your hand is up to you. So the one thing that I would like you to remember is that not all businesses can raise money. And not all businesses should raise money. And finally, raising money doesn't guarantee success. The reason I say not all businesses can raise money is that the traditional venture capital industry wants companies to go from 0 to $100 million in 5 to 7 years. This is hypergrowth, and it's not natural in business. A very, very small percentage of companies qualify for this kind of high velocity growth. And that's what VCs are looking for. But just if you do not have the ingredients of this kind of hyper growth, that doesn't mean that you cannot build a successful business. So it's important that you keep in mind that there are other strategies of building businesses as well besides venture capital. And nowadays, if you have been following this series or our podcast series or the blog, you may have encountered investors through our forum who are actually working on smaller businesses and looking for early exits. So that's a whole different strategy of fundraising. They are looking to build a company, get validation for a small amount of money, and then get a strategic exit to a larger company. That's a whole different ballgame. Now, there's a third thing that I want you to remember on this topic, and that is the notion of death by overfunding. If you go to our blog, 1Mby1M.com, and then go to blog, do a search for death by overfunding. We've done a lot of case studies of death by overfunding. There's been quite a few companies who have basically gone out of business, and because investors have flushed too much money into those companies, and that means that the expectation of growth and returns are equivalently higher, commensurately higher, and they just couldn't deal with that kind of growth. The fundamentals were not there to deliver on that kind of growth. So you have to keep all of these things in mind as you are developing your funding strategy. But all that being said, in 1 million by 1 million, we do raise money. We do make investor introductions. We have a wonderful community of investors. Hundreds of investors work with us, review our deals, and so on. So yes, you can absolutely come to 1 million by 1 million if you are trying to raise money. Okay, let's start with EPhone. Nohe Fekade, did I say that right? From Addis Ababa, Ethiopia. Welcome, Noah.
All right, it's a pleasure to be here. I hope you can hear me.
Yes, we can hear you fine. Please go ahead.
All right, so my name is Noah. I'm from Ethiopia. And today I'll be telling you about my company that we're working on here in Ethiopia. It's called EPhone. And I recognize the pitch deck according to the... I start my pitch. I wanted to... Can you hear me?
Yes, we can hear you fine. Please go ahead.
Okay, so we can all be in the same page. I wanted to describe the words that I'll be using multiple times, so we can all be in the same page. Please, whenever I say a dialer app, this is the app that I'm trying to refer, and when I say USSD services, these are the kind of services I'm trying to refer to. With that being said, please, next slide. All right, so our targets are active smartphone users. And our definition of our active smartphone users are users who use smartphone for more than just calling. This includes using USSD services and at the same time using app-based services and who spend money on their mobile phones. Please, next slide. So the problem that we're solving is, I don't know if you've noticed these days, but every services and brands are joining the app industry. Now, although it is smart to consider the mobile-first approach in emerging markets like Africa, an average smartphone user only opens 9 apps per day. Also, smartphone users are very concerned about their storage space when it comes to services. Additional to that, there are too many USSD services for us to remember, although some of them are very important and they require redundant tasks. And as we all know, smartphone users are impatient. Please, next slide. And our solution is very simple and effective. It's a super dialer app that automates USSD services and connect buyers with multiple service providers. This would allow you to save storage spaces on your phone, but additional to that, businesses will reach new customer base and users will discover new services and offers. Please, next slide. So here's how it works. Services are integrated as a button or API. This would allow offers to be displayed inside the app so that all users have to do is click and get the service. Please, next slide. To give you a clear understanding of what an app looks like, this is a screenshot taken from the app. As you can see, it has all the dialer functionalities where you can make a call, but also when you see the buttons here, they are automating the USSD services used, so you can utilize them without even remembering the codes. Additional to that, at the top of the screen, as you can see on the phone, there are third-party services aggregated into the platform, allowing you to consume services from your favorite brands without even installing their app. So using our Super Dialer app, not only you can back up your SMS and do all your dialer functions, but you can also be notified on new offers, book trips, buy tickets, and gate package. Please, next slide. So until today, we released our product on December 1. Until today, we have around 80,000 users, and we generated more than 500,000 in Ethiopian currency. Please, next slide.
What does that mean? What is the currency conversion rate?
When it comes to USD?
Yeah.
It's around $20,000, maybe more.
Okay.
I think can you get back one slide back? There is a user engagement.
This is your next
okay,
slide.
Okay, it's downloaded. I see. Okay, let's go. So the super app model is not a new concept. It's been validated in multiple brands and in multiple countries. If we could take a look at the Chinese, they've developed a WeChat and they have billions of users, and we can also see the same thing, which is Gojek in Indonesia with more than 100 million users. So the concept is not new, but it's time to do it in Africa the same way. This next slide.
Is there any competition in Africa that you have encountered so far?
Yes, we do.
Because I've seen this concept, even here in these roundtables, I've seen this concept from Africa.
Yes, definitely we did. We do have competition.
All right.
So this is our go-to-market plan. Users are very engaged when it comes to our dialer app. For that reason, we want to increase the use on the dialer app, also partner up with third-party service providers and integrate their services, and then expand with the same strategy to the other countries. Next slide, please. We are trying to raise 100K USD. That would allow us to reach a number of users to 700K and then also finance it for 19 months. As I told you, we're generating revenue as well. So combined to that, we will be profitable in 19 months. Please, next slide. Our business model is clear. We take commissions for every customers we send to the service providers, and we would also display ads that are not disturbing ads so that we can maintain the retention rates as well. Please, next slide. All right.
So let me ask you a few questions. When you say commissions and ads, right now the $20,000 worth of revenue that you have generated, what apps are you sending traffic to that is generating this commission?
All right, so we have integrated our service with a telecom service that is distributing airtimes virtually.
Mm-hmm.
So we're collecting commissions out of that.
And that's the single source of revenue at the moment. The 20,000 came
at the
from
moment.
That.
Yes, that's the only one. But on our next release, we've also integrated an API from a ride-hailing company, which is the best in the country. So we could also be collecting commissions from that.
Can you talk about how you've managed to get these 80,000 users?
Okay, so we haven't done any digital marketing, but we were participating in events, especially prior to COVID, the outbreak in our country. We were participating in events, making sure to promote the apps with our team and everyone. We go there, wearing T-shirts and capes and making sure people install it and making sure they buy airtime with discounts. But once you install the app, the good thing is we try to validate the concept and make sure to get feedback from the customers and reiterations on the platform so it could be more engaging. So if you once install it on your phone, you would see the difference from your default dialer, which would allow you to retain it and people refer it. So without any digital marketing, it was growing organically and we reach here organically.
So talk to me more about that. You recruited a handful of customers by visiting events.
Yes.
Why is this echoing, Maureen? Who's echoing?
Is it echoing? No, I'm okay. I can hear fine.
Now you're good? Okay, all right. So, it sounds like you recruited a group of users from doing events. And then these users came on to your app and started using the app, and then through their usage, you recruited new users. Is that correct?
That is correct.
So can you double-click down and explain to us what is the workflow? What happens? What behavior happens in the users who are already on your system? And what are they doing through which you are getting the new users?
Okay. So one of the functionalities, as I told you, is it automates USSD services. And here in Ethiopia, we have multiple USSD services which you use for recharging your airtime, buying internet bundles, accessing your banking information, paying bills, and different kind of things. So since these things automates those things and people don't have to do those redundant tasks, it became a trend to share the app. So people find the value in it.
There's no natural behavior that is causing viral adoption. It's basically people share it because they like it. That kind of sharing. There's no built-in virality.
The one built-in virality that we have is there is a VIP button on the app which would allow you to buy airtime for a discount if you registered as a VIP user. So if you're a VIP user,
built-in virality.
Well, one of the things that you could do is you can get commissions by selling airtime.
By selling airtime, so
yes.
People can.
So not only you can consume for yourself, but you can also sell the airtime and get a commission from that. So we believe that creates the virality in the middle.
And have you seen that? Is that proven?
Yes, we have a data to back it.
How many of the 80,000 users, what is the progression? So how many did you recruit at an event, and how many have been, how many users came in through sharing, and how many users came in through this, in search of the commission by selling airtime?
All right, so when we released the first version app, we didn't go to any events. We just give it to our friends and families and people that we know. So it was also valuable. People find it value in it, and then they were sharing it. But we didn't push anything on it. But we were iterating, asking people what should be added on it, and we were also using it. So we were thinking maybe if we added this, it could be better. So through multiple iterations, we find one version that people became more engaged on. The engagement rate increased from 4 minutes to 17 minutes when we did that. We make it a default app. That's when we started to attend events and making sure to distribute the app with multiple people as possible.
But you haven't answered my question. How many people are sharing the app to
are you asking me on a monthly basis? Sharmana, can you hear me?
My question? Yeah, can you not hear me?
I can hear you well now. Please, can you re-ask me the question?
Yes. How many of your 80,000 users are sharing the app because they're trying to get commissions on airtime?
Oh, the conversion rate is very low. It's almost close to 1%. So we only have the VIP registered users are around 750 and something. But they buy airtimes monthly. The monthly around average around $55.
Okay, so that's not like. See, the reason I'm asking you these questions, let me explain to you what funding these kinds of businesses entail. People need to understand that you have the ingredients of hypervirality. Unless you have the ingredients of hypervirality, they're not going to invest in a business like this. So,
could you please define what is hypervirality?
So let's take the example of WhatsApp. WhatsApp had hypervirality. Why did WhatsApp have hypervirality? You're a user of WhatsApp, I presume?
Yes, I do use WhatsApp.
Okay, so think about it. When WhatsApp started, somebody got access to WhatsApp and immediately invited a bunch of their friends because without their friends and family being on WhatsApp, WhatsApp would not be useful for them. Same with Facebook, by the way.
Definitely, I understand that. I understand.
So So unless you have hypervirality built into this,
Okay.
you're going to need to, I'm happy to work with you on the strategy of how to establish hypervirality.
All right.
But unless you establish hypervirality, these kinds of businesses, consumer businesses that depend on, hundreds of millions of users for their success,
Yes.
WeChat is exactly the same thing. You will
Yes.
not be able to raise funding. So I think there is an action item for you is to figure out the hypervirality strategy.
Perfect. One of the things we're planning to add after raising the finance that we're looking for is to have referral marketing inside the app where people will benefit from referring the apps. So
no, that's not considered hypervirality at all. You do not have a hypervirality strategy. You haven't thought about a hypervirality strategy yet. You need to think about how to establish hypervirality. Because as I'm saying, on these forums, I've seen super apps from Africa already at these roundtables, which tells me that Africa is flooded with competition of people who are trying to become the WeChat of Africa. So
yes.
How are you going to stand out? What are you going to do differently? And why you versus those others? Who are those others? What are their metrics, etc.? And what are their strategies for hypervirality? The company that is going to pull away from the pack of competitors is going to be the one who can crack the hypervirality issue. And that's the one investors would want to invest in.
Interesting.
Okay.
Would you mind if I ask you one question?
Oh, no, not at all. Please do.
All right, perfect. So do you think if we include a hypervirality into the platform already that is existing, don't you think it's going to be slowing down the referring rate? Because now you have to, the app would be more functional if you have your friends on board. Don't you see a side effect on that?
I don't understand what is the question.
Okay, so as we define hyper.
No?
Can you hear me?
Yeah, you went dead for a few minutes. Go ahead.
I'm sorry, it's my internet. So what I was saying was, as we defined hypervirality earlier, the platform itself would be more functional in engaging when you refer your friends or invite friends on board, right? But don't you see a side effect for us if we integrate those kind of methods into our platform? Do you think there will be a side effect where the referring the apps might decrease instead of increase?
Why? I don't see why.
Because this is more of a utility that you would have on yourself. You can benefit out of it without even sharing the app.
So one thumb rule that you should remember in super apps, why is WeChat so successful? Because WeChat is primarily a communication app. Why is WhatsApp so successful? It's primarily a communication app. Facebook is primarily a communication app. Instagram is primarily a communication app. And communication apps require people to communicate with. A utility app that does not have a communication component will never be a hyperviral app, and therefore it will never have the kinds of numbers that WeChat has. You have to factor that into your strategy. But the problem you have is that, things like WhatsApp are very big now. So, people who have communication needs already have WhatsApp to communicate. Yes, their communication needs are already met. They don't need you to come up with a communication app that's like WhatsApp. So there needs to be something else on your app that fulfills some other kind of communication need, and that's where you're going to need to be very creative to come up with some angle that gives you access to hypervirality. Otherwise, this business is not going to scale.
Good to know.
Okay?
All right. I
Hope that was
appreciate
helpful,
the perspective. Oh, definitely. It was helpful. I have one last question. If you go to the live deck of the pitch deck, I have one question. I was going through content in the website, and then I see one video which oh, okay. It wasn't supposed to end here. It wasn't supposed to end here.
Okay.
But yeah, so let me just ask you the question. So there is this one video that was saying the percentage of the investment that you could get based on the things that you have. If you have paying customers, this would be 0.1, and then it grows up with adding multiple attractions on it, right? So there are two parts that I didn't clearly understand on the last one, which is traction and track record. Would you please define what is the difference?
Yes, absolutely. So traction means, in your case, traction means different things in different cases. Let's say you're doing an enterprise business where you are selling to large enterprises. So if you come to investors with one large deal, which is, let's say, $100,000 deal, $100,000 deal selling to the right kind of customer that you're trying to build a business on, that is a very good validation. Now, if you come to investors with 10 of these as an early stage company, that will count as traction.
Okay.
Similarly, if your business is selling to small businesses and you are selling, let's say, $99 subscriptions per month subscriptions, and you come to investors with, let's say, 20 of these, that's considered validation. If you come to investors with 1,000 of these per month, that's considered traction.
Okay.
In your case, in B2C, again, it's different. Let's say in e-commerce, let's say it's an e-commerce situation. If you are selling 10 units, that's considered validation. If you have sold 10,000 units, that's considered traction. In your case, you have validation. You have actually validated your app, but you don't have traction necessarily. And in your case, because of this particular kind of app has a very specific, we have seen these apps before. The market has seen these apps before, and these businesses are completely dependent on hypervirality. So for you, hypervirality is one of the determining factors of how investors are going to evaluate this. Now, traction, that's how we define traction. Track record is about the entrepreneur. If the entrepreneur has done it before and has built a substantial company, that's track record.
All right.
Okay?
Perfect.
All right. You're very welcome.
All right. All right, Sharman, it's a pleasure to be here, and thank you very much. Thanks for your feedback.
You're most welcome. You're most welcome. You can, if you like, you can wait. I will explain how to use 1Mby1M next, actually.
Perfect. I'll be waiting.
All right. Folks, if you like what we do here, as you can see, we're very, very specific in how we give feedback, what feedback we give. We're not trying to give a pat on the back. We love all entrepreneurs. We are on the side of every single entrepreneur who comes through here. So by definition, we are giving you a pat on the back. But we want to go much further than that. We want to help you get further. We want to help you address the issues that you have to address to get further. So if you like this approach, please bring 10 serious entrepreneurs into 1Mby1M. All the resources from the program are at 1Mby1M.com. Entrepreneur Journeys book series is available on Amazon digitally all over the world. The blog series on our website is available all over the world for free. The books, there are 12 books. They're all case study based. You can study specific topics based on these books. These roundtables happen every week. They're free, and over 150,000 people from around the world have attended. In fact, as you see today, we have Nohe from Ethiopia, from Addis Ababa. I am thrilled, actually, to see entrepreneurs coming from Africa. And we, of late, in the last year or so, we've seen a lot of entrepreneurs coming from Africa, from Nigeria, from Ghana, from South Africa, from Ethiopia, Kenya, everywhere, Tanzania. So that's really interesting because we already know that the US has a lot of entrepreneurs, technology entrepreneurs. India has a lot of technology entrepreneurs. We've been seeing Latin America for a while now. The fact that Africa has joined the bandwagon in a serious way is very good news for the worldwide development, for the globalization of entrepreneurship, and for the economic development of Africa, which is, economic development is one of the agendas of the 1Mby1M program. One of the reasons we started it is to facilitate economic development. Now, the full acceleration program, if you want my help to address your strategy issues, if you want our help to get to investors, if you want our help for ongoing mentoring on a weekly basis, if you're trying to tackle, difficult issues and you want weekly mentoring and guidance, that's when you're going to need to join the premium program. We have a terrific curriculum where you can learn methodology and then you can get ongoing help through the premium program on a weekly basis. I suggest you go to the 1Mby1M self-assessment. This is a free tool that gives you the questions that investors will ask you. And these questions are also the due diligence questions you're going to be facing in any kind of investor introduction. If you have faced rejection from investors or even from accelerators like Y Combinator, Techstars, Y Combinator, by the way, has a 97% rejection rate. So if you faced a rejection from something like Y Combinator, you need to understand why, what's missing. And this self-assessment is going to give you some clues into what did they not see in your pitch that caused a rejection. If you get stuck and you need to learn methodology, 1Mby1M Basic is our curriculum-only option. You can start learning with 1Mby1M Basic. No problem where you are, what part of the world, what time zone. You can just start at your own time, own pace, own schedule. You can start learning the curriculum, and it's only $99 a month. So go dig around on the website, understand the program, see what you can expect from premium, what to expect from basic. Go through the FAQs, video FAQs. Go through the curriculum description. It is a case study-based curriculum. And we teach you based on the experiences of other entrepreneurs who've helped us build this curriculum, and there are 1,000+ of them. Our methodology is lean, capital-efficient, bootstrap startups. Bootstrap first, raise money later is the mantra. Noah, you're doing exactly the right thing by bootstrapping first and getting your ducks lined up before going out to raise money. And that's pretty much it. So we have 3 more free roundtables in November before Thanksgiving. We are off for Thanksgiving weekend. And then we have 4 more online rendezvous. These are Q&A sessions that I do on Tuesday mornings on LinkedIn, Facebook, and Twitter Live. That's it. If anybody wants to ask any questions, the line is now open. So just let us know if you'd like to dial in and dialogue. While you're doing that, let me introduce you to Irina Patterson. Irina at 1Mby1M.com. She's on our team, and she will be happy to answer any questions you might have about joining the 1Mby1M program. That is all. Any questions, folks? Noah, do you have any further questions?
No, it was all clear for me.
All right, terrific. Anybody else in the room? Would any of you like to introduce yourselves, where you're joining from, what you're working on, and what brings you here? Well, I don't see any more questions, so I'm going to adjourn the session for today. It is a shorter roundtable than usual, but we will come back and resume next week. If you want to pitch, go ahead and go to the website and register on the website. We'll see you soon. Bye. Thank you very much for coming.
All right. Have a good day. Thanks for your feedback. Thanks for your time as well.